Welcome to Mortgage 101, where you will learn the important steps of buying or refinancing a home. Hello, I am glad you are here. My name is Nathan Rufty, a mortgage loan originator with over 25 years of lending experience that has your best interests in mind. After listening to this full podcast, connect with me to discuss your home loan needs. Now on with the show. Today's podcast, we're going to talk about credit. There are 3 items you need to purchase a home or refinance one: income, credit, and equity. So in today's podcast, we're going to talk about credit. A lot of people Google, so number one search term, long tail key term is how to buy a house with bad credit. You got to determine what that bad credit is. Is it a 600 credit score? That's still a lendable credit score. 700, very lendable credit score. 500, yes, 500 is still a lendable credit score. Now 350, they go all the way down to 350 to 850. Anything from 760 to 850 is that same credit bucket. But anything lower than a 500, there's something major going on with your credit report, your mortgage-related credit report that you're going to have to clean up. But FHA will fund a loan with a credit score down to 500. You just got to find a lender that's going to go that low. And if you have a 550, still lendable, but you're going to have to put more money down. You're not going to get that same financing as if you had a 640. But here's a caveat when it comes to credit. Even though you have a lendable credit score, there's 2 components of the credit aspect when purchasing or refinancing home. The credit score, which down to 500 for FHA, 620 for conventional, is what's in the body of the credit report. You can have a lendable credit score of, let's say, a 650 or 700, but there's something in the body of that credit report that's going to still hamper your ability to be able to get a home loan, whether that be a bankruptcy not within a certain year time, a foreclosure, an open judgment, a repo, massive collections accounts. So you still may have a lendable credit score, but what's in that body of your mortgage-related credit report may still hamper your ability to get a home loan. So you got to look at those 2 aspects when it comes to credit and how you clean up that credit to enhance it. These are the steps. Now, if you want traditional lending, there's going to be traditional lenders out there that follow a certain guidelines. With conventional, FHA, conventional, VA, USDA, all have a minimum set of guidelines on what they will lend to a consumer. But you got to find that lender. What lenders have are what's called overlays. Some lenders do not have overlays, which means that FHA will fund somebody down to a 500, but some lenders will go, we're not going to go that low. We're going to stay with a 600 or 620 or 640. They can set their own overlay parameters if they want. They can tighten that guideline up. So not every lender is going to be the same. I know lenders out there that won't go less than a 640 credit score because they know just statistically that 500 to a 639 credit score borrower, that's a high default rate when somebody has that credit score. So they just say opt out and go, we're not going to touch anybody below a 640 or a 620 or a 580 or a 600. But if they do happen to go below a 620, maybe down to a 600 or 580 credit score, they're going to tighten up their guidelines a little bit more and say you can't have an open collection, you can't have this, you can't have that. So that's where the credit becomes skewed, if you want to call it, where a lot of people say, well, I have a lendable credit score. Well, if you're down in the 550s or 580s, something's going on with your credit body of your credit report, such as there's some outstanding collections that are still open, like medical, utilities, cable, a cell phone bill, water bill. Something is open, or you have a collection account on a small credit card. Something is just open and active that they're reporting you late. You haven't paid on it, but it's in a collection status reporting delinquent every single month, and that's holding that credit score down. You need to satisfy that. Now, this is not, you need to seek an advice of a credit repair company or a credit attorney on how to clean your credit up. But the lendable credit score, let's say you have a 600, even a 580, still lendable under FHA guidelines. But you have some open collections accounts, or you have some draw credit, or you have a high balance on your credit cards where your limit's 1,000, you have an 800 or 900, and you're always running that kind of a balance. There are some simple things you can do to improve your credit score that will open the ability for you to get a home loan. A couple of those things are pay all your bills on time. That's just a given. Everything pay on time. I've been doing this business for the last 20, 25 years. And statistically, when I ask somebody, do you know what your credit is? The person with that 780, 800 credit score, they know right off the bat because they're very, very proud of that credit score. When somebody's in that 620 or below, they don't know what their credit score is. And once I run it, statistically, they're below 600. They just don't keep up on that credit score. Credit is very important. You need credit today. People are running credit to get a job. If you don't have a lendable credit score or what's in the body of the credit, you may not get a job that you want. So credit is very, very crucial going forward in life for everything. Buying a car, getting a credit card, getting a student loan, getting a house loan, getting a job. That credit is important. And when I'm getting my cable or internet in my house, they want to run my credit because if I have a bad credit score, they want a bigger deposit. So it's just boiling down to that. You got to have that credit. We, in the past, could tell a borrower by their profile of their file, a long-term job, they have money in the bank. Today, it's just all automated. We just know the borrower, the consumer on their paper. If they don't look good on paper, they're not going to get any money. So when it comes down to the credit report, that tells you a lot. Forget about the income, forget about the assets. It's the credit. How are you as an individual or a couple responsible in paying your debt? And why would anybody else lend you any more money if you're not paying a collection bill for $100? That collection bill for $100 is hurting your credit score, your overall picture. So you want to go out and apply for a $200, $300, $400, $500,000 loan, but there's a $100 collection out there that you don't want to take care of. It's kind of hard for your credit to increase for that lender to know you on paper to say these people are great to lend to. Despite what your morals are that you want to pay these people because of you feel you were done wrong and you don't want to pay them, you got to suck it up and pay them. Settle. Just get it done. Get move on and get your credit, or you're never going to get a loan. You know, back in 15 years ago when the subprime meltdown happened, you know, in our business, you can fog a mirror if you have a breath, anything we can say that you're alive, we gave you a loan regardless of what your credit is. It's not going to be that way. When I started in this business many, many years ago, we didn't have credit scores. We really had to look at that consumer and grade them an F, a D, a C minus C. It was like a high school grade. That's how we graded an individual. Then the credit scores came out. I think in the late 80s, early 90s, credit scores came out, and it was just easy to say, oh, you got a 700, you're lendable there. Everything else in the body of your credit's going to be good. Well, now credit has tightened up a lot. So you got to have credit to get credit. You got to start small. And I know some of the older people in their 20s, 30s, not like older than me, but they're not young. They're not 18, 19, 20-year-olds. When I speak with the people in their 20s and late to early 30s, they said, yeah, I was dumb when a kid. I didn't know about credit. Well, you got to handle those things, man, because it's affecting your ability to get a job or purchase a home. So credit is very, very crucial on purchasing or refinancing a home today. So you may have a lendable credit score, but what's in the body of it? So easy things you can do is pay your bills on time. If you got a credit card that you're always running a high balance on and making that minimum payment, pay that bill down. 50% is good. Optimal is 20% of the balance, so of the limit. So you have a $1,000 limit, get it down to about $200. Don't cancel any credit cards. That is the most weight given towards somebody's credit report is open, active, using revolving debt. Not installments like student loans, auto loans, a jewelry store, a furniture store. Something that is an installment is not given a heavily weight on because there's an end. It's going to end soon, whether it be a 3-year term, 4, 5, 6, 7-year term. That's going to come to an end. Then the account closes and it's done. What does weigh on it is if you make a payment late. Anything that you pay late past the full 30 days is going to hit your credit report as a 30-day late. You got to pay those things on time, whether it be the minimum, just get them paid. Have that credit report stellar. You don't need a lot of credit. You really don't. You can stick with what you have 3 open credit cards are good, 1 installment loan, an auto loan, but have a minimum at least 3 open credit accounts, like 2 credit cards, 1 auto. Just have something open and active and using, not going crazy with it. So you start building your credit report up when you're younger, in your late teens, early 20s. Start building that credit report up. So when you're in the position to purchase a home, you have a good, strong credit score. And if you had to file a bankruptcy, get yourself reestablished. Yes, it's going to be painful. There was a reason why you filed bankruptcy. Uncircumstances probably not in your favor that you had to file a bankruptcy, whether it be a 7 or 13, but you had to file. You got to get back in the credit world, and it's going to be painful. Not everybody's going to lend to you, so you're going to take higher interest rate credit cards, higher interest rate installment loans. Just that's the world that you live in, unfortunately, that you're going to have to pay for a little bit. So yes, that bruise is going to be around for a while on your credit report, but over time it will rebuild and you will recover. Same thing with a foreclosure and a short sale. Your credit will recover. It's just on you. I know it's painful right when it happens, as you're going through it, and at the end of whatever, the bankruptcy or foreclosure. Yes, it's painful, but you're going to recover. It's how are you going to do that? So today we just run a credit score and go, oh, you got a 580, I'm not going to lend to you. If you're going an FHA route, because our lending guidelines may be a 620. So you're done. Can't do anything for you. You got to move on to the next lender. We go down to a 500. The company I'm currently with, they go down to 500. But remember, what's in the body of your credit report still can affect your ability to purchase a home. So credit is key today. You don't need a lot of it. You don't. Just open up a little bit, use it. Your cell phones and stuff like that do not report. Utilities do not report on your credit report as of today. They will report if you don't pay them, because they will go into collections, which is going to hurt. So keep that revolving debt. Use it responsibly. If you can ATM everything, that would be good, because it gets you in the habit of not putting everything on credit and maxing that thing out and paying a little bit every single month and not paying that debt down because of the high interest rates that those credit cards carry. So do build your credit profile on you, because that's what we look at as lenders. So if you found me by saying, how do I buy a house with bad credit? Define your bad credit. But if you're at a 550 open collection judgments repo, you're not going to be able to purchase a home traditionally. Now, if you want to purchase a home, there's what's called non-QM. Back in the day, we called it subprime, but there's non-QM lenders out there that will take a chance on somebody. They're going to look at your overall credit profile, income, and assets and say, okay, this person's going to be lendable, but you are not going to get that same financing under traditional. You're not going to get the same low interest rate, the same low down payment. They're going to want more from you because they're banking on you making your payment. But if they ever have to do foreclose on you, there's enough equity in there in the property that they're going to be able to secure their asset on selling the property and making a little bit of money, or at least getting their money back. So they're going to want you to invest more than 3.5% down for FHA and more than 3% down conventional. And they want you to have maybe a little bit of assets in the bank, and they're going to give you a higher interest rate. That's just the bruise that you got to take if you want to purchase a home. So don't ever let, you can't control what goes on around you, like job loss, the death of a loved one. That's the pays the bills. You can't control any of that. But if you have control over your finances, over your credit, with just you, make everything on time. Don't, despite on what you hate sometimes with these creditors. I've been there. I've been doing this a long time, that people don't like to pay them out of spite. Well, they're winning. You're losing as a consumer because they have all the control. You got to work on that. Don't let it get too late and that hole's gotten too deep. It's going to take you a while to get out of. Stop the bleeding. Make some payments to these people. Settle with them. Just do whatever you can to rebuild that credit as soon as possible, so you're back in the buying position with a good credit score and a good overall credit profile, what's in the body of that credit report, to be able to purchase a home. Credit is key to everything today. We run your credit. If it's not there, we move on. It's up to you as a consumer to have that credit profile built up and strong. Yes, you can have some dings. Yes, you can have a late. It's not the end of the world. We go down to a 500 on an FHA. Conventional 620 across the board. That's bare minimum. 580 for VA, 600 for USDA. So there are some programs out there for you. 620. We have a program that goes down to 620 on a down payment assistance program. So do call me about that. But I'm here to educate my consumer, my borrower, on what it takes to purchase a home. I talk to a lot of borrowers that are frustrated. I want to buy. I got enough money. Well, your credit unfortunately doesn't show that you pay bills on time. I mean, give us a reason, the industry, to lend you money that you're going to pay it back. Now, if something happens in foreseeable, sure, that's not going to be your issue. But if there was collection accounts with cell phones, with utilities, with a repo on a car, that repo kills people. Student loans are killing people right now. They're going into deferment. They're not paying them, and their student loans are never going to go away. You can't bankrupt them. And you just can't. So they're always going to be there. You got to address them as soon as possible. And that's the biggest thing that I see right now that are hurting people's credit report are the student loans. You know, you can do an IDR, income-driven repayment program. You can defer them just to start saving money, make the minimum payment. You can work those things out. They just want to get paid is all they want. So do work on your credit. Don't get into debt. You don't need it. It's the person that goes out and buys a new car and 6 months later wants to buy a house. Well, that car just took them out of the debt-to-income ratio, and it took them too high. Now they can't afford where they need to be at. So work on the credit. I'm going to have series. I will please, subscribe to our channel. I'm going to go through income. I'm going to go through assets. We're going to get you in the position as a consumer to be able to refinance or purchase a home. I want you to get there. If you're a willing, able participant, whether it be a home buyer or a home refinance person, I'm willing and able to sit here and help you, guide you through this process. If you can't buy now or refinance now, I will educate you on what you need to do to be in that position to be able to qualify for a home loan. I'm just not going to throw you out there and say, like most loan officers, unfortunately, it's just a call center. Get them in, get them out, get them in, get them out. I don't work for a call center. So I'm here to educate and get my consumer in a position to purchase as long as you, the consumer, are willing to go through those steps. It might be painful, it might be long, it might be stressful, but that's what you need to do to get in the position. It's very painful to lose weight. I mean, you got to work out, you got to eat right. I mean, we're all there. We all struggle with that. Same thing with getting a home loan. If the credit's not there, then you can I got a lot of people that I've talked to over my last 20-something years that make over $100,000 a year, but their credit does not allow them to be able to purchase. They got the money down, just enough to get into a home. They got the credit score, the income to make sure that they can make the payments on time, but their past credit has haunted them. And it's going to continue to haunt them. If they want favorable financing with traditional lending, Fannie Mae, Freddie Mac, FHA, VA, and USDA, they got to have a certain guidelines that they got to fit within a lendable, insurable bucket. If they don't, they got to go to non-QM. And a vast majority of the individuals that I say that you got to go non-QM, they don't want to go there because they want the great interest rate, they want the low down payment, but their credit score does not allow them, or what's in the body does not allow them to get that. So work on that credit. Call me if you are a willing and able participant, and I can assist you on getting you where you need to be on purchasing or refinance a home. That's what I want to do. I want to earn your business. But you as a consumer also need to get into you got to be a willing and able partner in this transaction to help you get where you need to go. I can guide you. I can lead you to the water. I can't tell you to drink it. That's on you. Okay? So subscribe below. All my contact information is below. But if you're looking, you Googled me probably because you're looking for how to buy a house, how to purchase a home with bad credit. Well, you got to find your bad credit for one thing. But the bad credit to me is somebody in below 600 that has a repo that's open, that has judgments that are open, collections that are open. They haven't made their payments on their student loans. They haven't made payments on recent installments or credit cards. Those things are not going to get you in the position to purchase. You've got to buckle down and you've got to somehow bring those things current. I'm willing to guide you through that for free. So call me, 909, or text me. Call me, text me. All my information is below. But my good cell phone direct line, 909-503-5600. This is Nathan Rufty, Mortgage Loan Originator, and thank you for listening to Mortgage 101. Thank you again for taking the time to listen to this very informative podcast. Remember to subscribe, share, like, and comment. There is no better time than today to explore your options to purchase or refinance a home. Please call, text, or email me at the information below to get started right away, and I look forward in hearing from you.